Hello, and welcome to the second session in our three-part series of staff presentations on the monitoring and remediation process component of QC 1000, the PCAOB's new quality control standard. Today's presentation specifically covers how to determine if engagement deficiencies exist, how to respond to engagement deficiencies, including the auditor's responsibility to respond to engagement deficiencies on completed engagements under an amended and retitled AS 2901, responding to engagement deficiencies after issuance of the auditor's report. We'll also discuss how to determine if QC observations and QC deficiencies exist. My name is Skylar Sims, and I am an assistant in the Office of the Chief Auditor. Given the intent of this staff presentation is to focus only on one aspect of the monitoring and remediation process component, we will not be discussing all of the nuances of the standard and related amendments. So I encourage participants to read the adopting release in order to gain a more complete understanding of the new standard and related amendments, and also to explore our other implementation resources, including staff guidance. All of this can be found on the PCAOB's website. So before we get started, I'll state our standard disclaimer. The views expressed are offered in my capacity as staff of the PCAOB's Office of the Chief Auditor, but they are my own and do not necessarily reflect the views of the board as a whole, any individual board members, or other PCAOB staff. As a reminder, we prepared other staff presentations covering other parts of the monitoring and remediation process component, including the objective of the monitoring and remediation process, general requirements for monitoring and remediation, requirements related to designing and performing monitoring activities for engagements, and the QC system itself. Performing root cause analysis on QC deficiencies, and designing, implementing, and testing remedial actions. These Part 1 and Part 3 staff presentations are available on our QC implementation webpage located on the PCAOB's website. So in our previous staff presentation, we focused on the requirements related to designing and performing activities to monitor engagements and the QC system. Today's presentation will focus on how to determine if engagement deficiencies exist and how to respond to them, including the auditor's responsibility to respond to deficiencies on completed engagements under new AS 2901, responding to engagement deficiencies after issuance of the auditor's report. We'll also discuss how to determine if QC observations and QC deficiencies exist. During today's presentation, I'm going to introduce some new terms, which are highlighted in red font on the slide. These definitions can be found in Appendix A to QC 1000. Okay, let's get started by discussing the requirements related to how to determine whether engagement deficiencies exist and how to respond to them. So an engagement deficiency, as defined in paragraph A4 of Appendix A to QC 1000, is an instance of non-compliance with applicable professional legal requirements, referred to as APLR and defined in paragraph A2 of Appendix A to QC 1000, by the firm, firm personnel, or other participants with respect to an engagement of the firm, or by the firm or firm personnel with respect to an engagement of another firm. An engagement deficiency could be an instance of non-compliance in which a firm didn't adequately support its opinion or didn't fulfill the objective of its role on the engagement, such as not performing attestation services in accordance with AT number 2, or other instances of non-compliance with APLR with respect to a firm's engagement. A firm's determination that an engagement deficiency exists may pertain to an in-process engagement, a completed engagement, or work performed on another firm's engagement. QC 1000 requires a firm to evaluate a variety of information in making its determination about whether an engagement deficiency exists, including internally developed information from monitoring activities, information from external parties like regulators and peer reviewers, and other relevant information of which the firm becomes aware. A firm is not expected to seek out other sources of information that may indicate an engagement deficiency exists beyond the sources specified in QC 1000. However, if the firm becomes aware of such information, the firm is expected to evaluate it. For purposes of the standard, the firm is deemed aware of information when any partner, shareholder, member, or other principal of the firm first becomes aware of such information. The note to paragraph 67E includes examples of how the firm may become aware of other relevant information, including through documentation being assembled for retention, procedures performed on the subsequent year's engagement, and restatements, to name a few. Importantly, QC 1000 requires determinations be made on a timely basis. For completed engagements, the timeliness of the determination depends on the nature of the information subject to evaluation. So, for example, if the information suggested other engagements may present a similar issue, then we would expect that determination to be made sooner so that the risk of engagement deficiencies on other engagements, whether in process or completed, is mitigated. Next, I want to take a minute to highlight some unique considerations related to monitoring of in-process engagements and the identification of engagement deficiencies on those engagements. Firstly, the objective of in-process engagement monitoring is to evaluate information about potential deficiencies on in-process engagements to determine whether an engagement deficiency exists, and if so, to correct the deficiency before the engagement report is issued. So let's separate these potential engagement deficiencies into two categories. One is whether the potential deficiency relates to APLR responsibilities, either prior to or at the beginning of the engagement. And the other is whether the potential deficiency relates to those ongoing responsibilities under APLR for performing the engagement. Because some APLRs, such as those related to preliminary engagement activities, including engagement acceptance procedures and certain audit committee pre-approvals, are required to be complied with prior to or at the beginning of the engagement, an engagement deficiency would arise if the required time for performance had passed and the required activities were not performed appropriately, even if the engagement was still in process. So, for those ongoing responsibilities, since the engagement team would still have the opportunity to rectify a problem before the issuance of the audit report, no engagement deficiency would arise if the problem was resolved before the issuance of the audit report. So, for example, if an engagement team initially failed to obtain sufficient appropriate audit evidence in its testing of revenue because it failed to perform a necessary procedure, the engagement team could still perform the procedure at a later time during the engagement, as long as sufficient appropriate audit evidence was obtained prior to the issuance of the report. There would be no engagement deficiency. However, even in instances where an engagement deficiency does not arise because a problem was identified and corrected prior to issuance of an engagement report, a firm would still need to consider whether the existence of the problem constitutes a QC observation, which is an observation about the design, implementation, or operation of the firm's QC system that may indicate one or more QC deficiencies exist. In this case, the problem is that the engagement team failed to perform the necessary procedure, and the firm would need to consider how and why that happened. For example, was the procedure missing from a particular firm template that the engagement team used in order to determine whether a QC observation exists? So a firm's determination that an engagement deficiency exists may pertain to an in-process engagement, a completed engagement, or work performed on another firm's engagement. When an engagement deficiency is identified, the action that the firm is required to take depends on which of these three buckets the deficiency falls into. Actions to respond to engagement deficiencies related to in-process engagements are required to be taken as required by APLR to the extent necessary before the issuance of the related engagement report, such that the report is appropriate in the circumstances. So consider an example where a firm identified an engagement deficiency on an in-process engagement because the engagement team didn't test the completeness and accuracy of information produced by the company that the team used to perform substantive procedures. In response to this deficiency, the engagement team is required to perform the required audit procedures before the auditor's report is issued. Importantly, for engagement deficiencies that could result in an unsupported auditor's opinion or that could affect the auditor's report, for example, a critical audit matter, remedial action is required before the auditor's report is issued, such that the auditor's report issued is appropriate in the circumstances. If an engagement deficiency would not result in an unsupported auditor's opinion or would not affect the auditor's report, action is still required to address the deficiency, but if action is performed after the report is issued, the provisions of paragraph 68B addressing engagement deficiencies on completed engagements will apply. If action is performed before the report is issued, no engagement deficiency would arise, but a firm would still need to consider whether the existence of the problem constitutes a QC observation. Actions to respond to engagement deficiencies related to completed engagements are also required to be taken as required by APLR, unless it's probable that the engagement reports are not being relied on. However, if it is not probable that the report is not being relied on, the firm is required to take action required by APLR. In this case, AS 2901 and AS 2901 is applicable. AS 2901 addresses how to respond to an engagement deficiency identified after the issuance of the auditor's report, and it was amended as part of the adoption of QC 1000. We'll be covering the auditor's responsibilities under AS 2901 in detail on the next few slides. As a reminder, AS 2905, although not amended as part of QC 1000 adoption, addresses when the auditor becomes aware of information which relates to the financial statements previously reported on by the auditor, which was not known to the auditor at the date of the report, and which is of such a nature and from such a source that the auditor would have investigated it had it come to the auditor's attention during the course of the audit. Finally, if a firm identifies an engagement deficiency on work it performed on another firm's engagement, it's required to communicate the deficiency to that other firm and to take any remedial action that the other firm determines is necessary to respond to the deficiency. The actions taken by the firm to respond to engagement deficiencies may include preventive or corrective actions or a combination of these actions. So corrective actions are actions taken to rectify an identified deficiency in a current or completed engagement. For example, performing a procedure that had been omitted, designing and performing additional or alternative procedures if audit evidence is insufficient, or filing a required report. Preventive actions are actions taken to prevent the occurrence of a deficiency in future engagements. For example, training, developing audit tools, or enhancing audit methodology. Now, let's talk about Amended AS 2901. So Amended AS 2901 becomes effective on December 15, 2025, and introduces a number of changes to existing AS 2901. So first, it broadens the scope of AS 2901 to incorporate the new term engagement deficiency from QC 1000. This extends the requirements of AS 2901 to be applicable to both financial statement and ICFR audits, not just financial statement audits. Also, Amended AS 2901 covers all engagement deficiencies, so both those that affect the auditor's opinion and those that do not. Existing AS 2901 states that it applies only when the auditor concludes that procedures considered necessary at the time of the audit in the circumstances then existing were omitted. And finally, under Amended AS 2901, remediation is required for all engagement deficiencies unless it is probable that the auditor's report is not being relied upon, whereas existing AS 2901 states that the auditor should perform omitted procedures or alternative procedures that would provide a satisfactory basis for his opinion, or, in other words, in instances where the opinion is not sufficiently supported. AS 2901 requires firms to take action to respond to all engagement deficiencies identified on completed engagements unless it is probable that the auditor's report is not being relied on. If a deficiency is identified on a completed engagement, but it's probable the reports associated with that engagement are not being relied upon, no action is required of the firm to address the engagement deficiency. Even though no action is required to address the engagement deficiency, the firm would still include them in the population of QC observations to be evaluated to determine whether QC deficiencies exist under QC 1000. If it is not probable that the report is not being relied on, the firm is required to comply with AS 2901 and AS 2905. AS 2201 directs the auditor to comply with AS 2901 and AS 2905 as it relates to audits of internal control over financial reporting. AT number 1 and AT number 2, also amended as part of this rulemaking, incorporate responsibilities similar to those under AS 2901 for attestation engagements relating to certain broker-dealer reports. So let's talk about how the auditor determines if it's probable that a report is not being relied on. So in the absence of circumstances indicating that reliance is impossible or unreasonable, inclusion of an auditor's report in the most recent filing on an SEC form that requires inclusion of such an auditor's report generally evidences that the report is being relied upon. The determination that an auditor's report is not being relied upon would primarily be influenced by whether the auditor's report and related financial statements are readily available and whether a trading market exists for the company's securities. Circumstances that may suggest for an audit of the financial statements or an ICFR audit that the auditor's report is no longer being relied upon could include so much time has elapsed that the financial statements covered by the auditor's report are no longer required to be included in SEC periodic reports, or the issuer or broker-dealer's business has been dissolved or gone into liquidation. If an auditor's report is included in the company's most recent SEC filing, a firm would almost always conclude that the auditor's report must be treated as being relied on. However, circumstances may exist where it is reasonable for the firm to conclude that reliance on the report is impossible or unreasonable, such as the cessation of a trading market for the issuer's securities. So the requirements in Amended AS 2901 for responding to engagement deficiencies differ based on whether, despite the deficiency, the auditor obtained sufficient appropriate audit evidence to support the auditor's opinion. For an engagement deficiency where the auditor did not obtain sufficient appropriate audit evidence to support their opinion, the auditor is required to perform procedures to obtain additional evidence to the extent necessary, such that the opinion is supported by sufficient appropriate evidence. The type of procedures that the auditor performs in response will be guided by the type and amount of evidence needed to support the auditor's opinion. So, for example, say that during monitoring of a completed engagement, it was determined that an engagement team did not obtain sufficient appropriate audit evidence over an issuer's fixed assets because it used the firm's sampling tool incorrectly when testing the company's fixed asset additions. In response to the engagement deficiency, the engagement team generated a new list of fixed asset addition samples and performed procedures to obtain sufficient appropriate audit evidence without identifying any exceptions. If the auditor is not able to obtain sufficient appropriate evidence to support the opinion, the auditor should take appropriate action to prevent future reliance on the audit report by following the requirements in paragraphs 6 through 9 of AS 2905. Subsequent discovery of facts existing at the date of the auditor's report. Note that the board didn't make any amendments to AS 2905 as part of the adoption of QC 1000 and related amendments. In circumstances where the auditor obtains sufficient appropriate audit evidence to support its opinion, but other engagement deficiencies were identified, the auditor is required to take action to address the deficiency, considering the nature and severity of the deficiency. Examples of other engagement deficiencies could include situations where an engagement team didn't include all relevant work papers in its final assembled set of audit documentation, or it incorrectly calculated the extent of another accounting firm's involvement in the audit for purposes of determining what to report on Form AP. As a reminder, the actions taken by the firm to respond to engagement deficiencies may include preventive or corrective actions or a combination of both. When the auditor's response to engagement deficiencies involves adding information to the auditor's working papers, AS 2901 requires the auditor to comply with AS 1215 paragraph 16. Under AS 1215, audit documentation may not be deleted or discarded after the document completion date, but information may be added. Any documentation added must indicate the following: the date the information was added, the name of the person who prepared the additional documentation, and the reason for adding it. Paragraph 82C3 of QC 1000 also includes a documentation requirement in support of the design, implementation, and operation of the firm's QC system that firms document the actions taken to address engagement deficiencies as part of the monitoring and remediation process. Okay, so now that we've covered how to determine whether engagement deficiencies exist and how to respond to them, including the amendments to AS 2901, let's go back to QC 1000 and discuss the requirement to evaluate whether similar engagement deficiencies exist in other in-process engagements, completed engagements, and work performed on other firms' engagements. So if similar engagement deficiencies are identified, QC 1000 requires the firm to respond to these engagement deficiencies in the same manner as the firm would respond to any other engagement deficiency it may identify. Understanding the nature of the engagement deficiency will assist the firm in determining the extent of the necessary evaluation. In some instances, a firm may find it beneficial to perform a root cause analysis to determine what action to take to respond to an engagement deficiency, and also to comply with paragraph 68D. To illustrate, if the engagement deficiency was caused by an error in the firm's methodology for auditing a company's loan valuation allowance, then the firm would evaluate whether similar engagement deficiencies exist on engagements that were also using that methodology. As another example, if engagement team members did not comply with PCAOB standards when auditing accounts receivable because they failed to perform certain procedures in the firm's audit program, Among other things the firm might do, the firm would evaluate whether the persons who were responsible for performing the procedures and the person supervising the work participated in any other audit engagements accounts receivable testing, and if so, whether similar engagement deficiencies exist. So we received questions about how to implement this requirement. That is, how to evaluate whether similar engagement deficiencies exist on other engagements. For example, is the firm expected to look at all engagements, some, or take a risk-based approach? It will be important to understand the reasons for the engagement deficiencies because that will inform the nature and extent of the procedures to be performed on other engagements and work performed on other firms' engagements. I want to emphasize that sampling is not appropriate when selecting which engagements to monitor when evaluating whether similar engagement deficiencies exist on other engagements. So next up on our monitoring and remediation pie chart, we'll talk about how to determine if QC observations and QC deficiencies exist. So firms are required to timely evaluate certain information to determine whether QC observations exist, including information from monitoring activities, from oversight activities by regulators or other external inspections or reviews, or any other relevant information the firm becomes aware of. QC observations is a defined term in paragraph A9 of Appendix A. Basically, any information that may indicate a problem with the design, implementation, or operation of the firm's QC system is a QC observation. So that includes all engagement deficiencies, as well as things like an error in the design or operation of a technology tool or methodology, or any other information that suggests the firm may not have achieved a quality objective. All engagement deficiencies are QC observations, but as I'm going to explain next, not all QC observations are QC deficiencies. So once the firm identifies QC observations, it evaluates them to determine whether QC deficiencies exist. So firstly, QC deficiency is a defined term in paragraph A8 of Appendix A of QC 1000. And I'm not going to read the full definition, but at a high level, a QC deficiency is a QC observation or combination thereof that evidences either the firm hasn't achieved the reasonable assurance objective or one or more quality objectives, or it hasn't complied with the requirements of QC 1000. The determination of whether a QC deficiency exists is based on two factors. First is the nature, severity, and pervasiveness of the matter that gave rise to the QC observation. And the second is the likelihood that the matter could affect other QC system components or other engagements, including in-process and completed engagements, engagements to be performed in the future, and work performed on other firms' engagements, and the severity of such an effect if it were to occur. The following illustration, also found on page 235 of the adopting release, provides example fact patterns suggesting when a QC observation may be less likely to be a QC deficiency and when it may be more likely to be a QC deficiency. And as discussed on the previous slide, the nature, severity, and pervasiveness of the matter that gave rise to the QC observation should be taken into account when determining whether a QC deficiency exists. So factors affecting this determination include the components of the QC system, quality objectives, or quality risks to which the observation relates. So depending on the quality risks that a firm identifies, some components may play a greater role in its QC system than others. As an example, for a small firm that audits one issuer and has no intention to expand its issuer audit practice, The engagement performance component would have a greater role than acceptance and continuance of engagements because the quality risks associated with the new engagement would be mitigated by the firm's policy of not taking on new issuer audit engagements. Whether QC observation is in the design, implementation, or operation of the QC system. So for example, a matter that gave rise to a QC observation in the design of a process has a greater likelihood of being pervasive to a firm's audit practice than a process that did not operate as designed on one occasion. The frequency with which the QC observation occurred. So frequency relates to the number of times the matter that gave rise to the QC observation occurred. For example, on engagements within a particular industry sector or practice group, a particular office, or firm-wide. It might also relate to the number of times the observation was identified, the number of firm personnel involved, or the number of quality objectives affected. When related to the execution of a firm's quality response, it would also include the relative frequency of QC observations compared to the number of times the procedure was executed properly. The duration of time that the QC observation existed. So duration addresses how long the matter that gave rise to the QC observation existed. In order to understand duration, a firm would need to understand whether there were other instances prior to those initially identified by the firm as QC observations. The firm must also take into account the likelihood that the matter that gave rise to the QC observation could affect other QC system components or other engagements when determining whether a QC deficiency exists. Other engagements would include in-process engagements, completed engagements, engagements to be performed in the future, as well as work performed on other firms' engagements. An important point I want to make here is that when a firm is determining the likelihood that the matter could affect other engagements or QC system components, any mitigating actions that a firm may design and implement to that particular engagement deficiency would not be taken into account, even if they have been implemented. And this is because the determination of whether a QC deficiency exists must be made based on the nature, severity, and pervasiveness of the matter that gave rise to the QC observation viewed on its own. That is what demonstrates the extent to which the QC system failed in allowing the underlying matter to occur. Whether the firm was subsequently able to partially or fully remediate the QC deficiency does not eliminate the fact that the failure occurred. So that concludes our Part 2 presentation in the 3-part series of staff presentations on the monitoring and remediation process. As a recap, today we've covered how to determine if engagement deficiencies exist and how to respond to them, including the auditor's responsibility to respond to deficiencies on completed engagements under an amended and retitled AS 2901, responding to engagement deficiencies after issuance of the auditor's report, as well as how to determine if QC observations and QC deficiencies exist. Before we wrap up today's staff presentation, I just want to remind everyone of our QC implementation webpage located on the PCAOB's website. We continue to update it as we develop additional implementation resources. These include a staff presentation of an overview of QC 1000, as well as staff guidance documents covering aspects of QC 1000 and the related amendments to AS 2901. The QC implementation webpage also includes a phone number and a form for contacting the PCAOB regarding such standards-related inquiries. If you subscribe to PCAOB News, you will receive a notification when the page is updated with new resources. For more information on the standard and related amendments, please also see PCAOB release number 2024-005 on the PCAOB's website. Thank you for listening and have a great day.